What's an LLC? What's an S-Corp? Which one's the best one for you? Before we get into that, we got to do step 1A. And that is, we have this idea, we're going to start a business, right? Whether that's a product or a service, we're getting excited. And the first thing we do is we get a piece of paper and we're just writing down names, right? Getting creative. We come up with a name and this is the name that's going to make you billions, right? Well, listen, your great product or your great service, right, is going to make you billions, not the name. What I mean by this is a lot of people are, oh my God, I got this name. I have to run and get this thing set up as a corporation or an LLC. And then things fizzle out, right? Now you paid somebody or you went online. But the worst thing is there's going to be a tax return that you have to file. If you set up this entity, there's a state out there that knows there's a live breathing entity here and they're going to want a tax return, which means you're going to have to go out at some point, even if it's a zero, and have somebody do this. And the reason I bring this up because there's so many people that, in that emotional process of coming up with a name, they're not ready yet. And then there's fees and expenses with this empty shell that nothing is happening. So here's what I recommend you do. You can park. There's something called parking the name, right? You can go to the Secretary of State, right, in your state and say, listen, I've come up with this name. I'd like to park it. Is it available? And they'll give you some time. Every state's going to be different. Very, very valuable process because that's going to give you peace of mind, right? That your name is now reserved. And instead of blowing money in quickly going after the name and paying fees that you don't have to, you're going to have money now to sit with a CPA and an attorney so that together we can come up with the best entity structure for you. LLC, S-Corp, a whole bunch of others, right? But for now, we're going to talk about LLC or an S-Corp. And why is it important to meet with your CPA? Well, here you go. Your CPA needs to know, right, in order to guide you, is there a spouse? Does your spouse work? How much does your spouse make? Do you have any real estate? Are you receiving any other income? Do you have any other businesses? Are you buying, selling stocks? Do you have capital gains? Are you receiving passive income? All of this is brutally important because that information is going to help the CPA say, wait a minute, you already have a lot of income. Why are we going to put more income on that? Let's go with this structure and start saving some money. So that's why it's important. And of course, listen, if you've got a whole bunch of assets, you want to make sure you're sitting with the attorney because they're going to be able to put the umbrella, the coverage over those assets to protect them while you're in business, especially if you have a product or a service that has maybe some high product liability behind it. So this triangle, this pyramid that I'm talking about is really, really important for you. You've now sat with the team. You know you have a viable business. You know what the right entity is. Now you can go right to the Secretary of State and say, listen, here are my filing papers, right? And the entity becomes alive. And we know that once you have an entity, depending on which one it is, right? For example, if you have an S-Corp, well, you got to, pull out its own identification number, FEIN. You're going to have a, separate books and separate tax returns, as opposed to an LLC as a single member, right? So if it's just you in this business and we determine that, listen, you're better off with a disregarded entity such as an LLC, single member, a lot less compliance. You don't need to get that FEIN number, right? Because if you don't have any payroll and if it's just you can operate that just with your Social Security. It just makes compliance a lot easier. The accounting is a little bit different for a sole proprietor. You don't have things like a balance sheet. And of course, the tax return itself is different. There is no separate tax return. An LLC that gets filed for tax purposes as disregarded, it's just a two pages, Schedule C, 1 and 2, right? And that's where you basically show your income and your expenses. Now, why start there? Well, you would be starting there if in that conversation with your CPA, it was determined that, listen, this is a new business, it's a new thought. And I think that maybe in my first year, I'll be able to do, I don't know, maybe $40,000, $50,000 in profit, right? That number is not big enough to absorb the costs, the administrative costs, the tax costs that you would have under an S-Corp. Maybe a better number is if you hit $60,000 in profit, that is the amount of money of profit that it starts to make sense to say, hey, I got to get out of this sole proprietor, right? This LLC single member and make an election to an S-Corp. Why? Because let's assume some numbers here. If all of a sudden now you are, profiting $100,000, right? Your net earnings $100,000. Well, there's something called self-employment tax. And as a Schedule C, you're going to pay the whole thing of that self-employment tax, which is 15.3% as of right now. So that's $15,300 that it's going to cost you in taxes on top of income tax. That's where things start to get really expensive. You have income tax and then you're getting hit with the self-employment tax, right? But now if you're profiting $60,000 or more and we swap out, make an election into an S-Corp, and you have that same $100,000 profit, you don't have to pay yourself a W-2 for the entire $100,000, right? You just have to pay yourself something called reasonable compensation, right? And remember, you might be the main person, right? And you say, well, I do it all, right? In terms of the product or the service. Well, but you probably also clean your office, whether that's at home or you're renting a space, you're cleaning that office, cleaning those toilets. You're probably doing the billing, receiving the payments, doing some customer service, some administration. You're wearing a lot of hats that aren't, top dollar paying hats. So let's just say of that $100,000, $50,000 is reasonable compensation. Well, the other $50,000, you escape that self-employment tax. So that's a big, big savings, whatever that is, maybe $7,500, right? A little bit more than that. And that $7,500 is the justification, right, for the additional accounting and compliance that you're going to have, because now you have payroll, you got, quarterly forms that you have to do, payroll tax deposits, of course, year-end W-2s. And you have, as I mentioned early on, you have this separate tax return, the 1120S, if you went the route of the S-Corp. So listen, in a nutshell, those are the steps, right? We're going into business. We're going to reserve our name. We're going to build our team, our CPA. We got our legal counsel. We've selected the right entity that gives us tax minimization, increase in profits, ultimate liability, right? Asset protection. And now we can just go and hit go, right? Instead of figuring out, a week, a month, 6 months, a year later, man, I'm in the wrong entity. I'm just paying way too much for what I'm doing, or I should have been this from the get-go. Don't complicate your business. Don't go backwards, right? One step forward, two step back. Get with the team, do it right, and then when you hit go, you're just going out there and promoting your product or service with no headaches whatsoever of, am I doing this the right way, guys? I hope this helps. This is how you're going to best determine what entity is right for you.